So let's say that they do raise rates. Our expectation would be that risks assets or kind of technology growth stocks, whatever, they all are going to sell off to some degree. They already have.
I think.
They already have, and maybe they go lower, maybe they don't. How long can they last with those risk assets selling off? Or is there a period where they kind of capitulate from like the Fed level and they're just like, okay, like this is enough bleeding to some degree. We either need to stabilize the rate and go ahead and tell the market we're not going to raise past a certain point, or they need to provide more quantitative easing or use one of the other tools in their toolbox where they kind of try to find like almost like a market equilibrium, right? We were going up a ton, now we're going down. Like, do they eventually just try to stabilize us somewhere and say like, okay, enough is enough on the downside. Like, here's where we want to stay.
Well, that's an interesting point because actually in a normal sort of central bank policy, the Fed shouldn't be worried about asset prices. Like the Fed should be worried about inflation. And then lately they expanded the mandate and said we should be worried about employment numbers. Mm-hmm. Yeah, but they shouldn't be worried about that. But fact is,
remember they were day trading the assets.
Yeah, fact is, I do think they are. By the way, I do think it is smart from them to be worried because, but that's sort of my geopolitical view. I think we all agree the US is in kind of a silent war with China. Yeah, and I think at the end it's not going to go into an armed conflict, but what will decide sort of this conflict or this race is the speed of technological innovation. So if I would be sitting in an administration, I would think day and night, how can I make sure that my country, the US, is sort of at the forefront of every technological innovation? And I know a lot of media people and investors made a little bit of fun. And yes, there was like craziness in the market where things which maybe are not worth anything or not worth a lot were hyped. But if we take a step back and look at the last 10 years, or especially the last, let's say, 3 years, 5 years, actually because of the, let's call it easy money, a lot of great stuff was financed. So a lot of things which are positively happening now, are happening because money is cheap and money is easy, but it's driving our society and technological innovation forward. So I would actually say, I think they will never admit it, but I personally do believe that sort of a thriving environment for growth stocks, not to make, that's the cynical view, the rich richer, but actually to make the country more competitive towards especially China, is a strategy the Fed is or the administration, again, I think it's almost intermingled, administration and Fed is doing, and it's the right thing to do. I do think though for this year, as I said before, the political agenda prevails. So I think the Fed will more focus on sort of appeasing people and trying to show we're doing something against inflation than fostering innovation. So I do think growth stocks won't have an easy year. But again, I just want to quote her because I think she wrote this awesome piece, Kathy Wood, before, like it was right around Christmas, where she had this term like actually growth stocks are in deep value territory. And I think, so they already sold off. So again, I'm not a trader. I build companies. I own all the stocks for a long time. But my gut feeling is like, if I look again at some of my portfolio companies, which I can judge, the sell-off was crazy. And it's extremely undervalued.
Yeah. When you think about an asset like maybe Bitcoin, for example, right, which to me is like the ultimate risk asset from the traditional world. Now, many people in the crypto market would say, hey, Bitcoin is, boo burn coin, or it's the least risky of all of them. And the long tail of crypto assets are even more risky. So take those people out for a second, just at the traditional market side. They look at Bitcoin as kind of the digital frontier or the most risky asset. Should we expect that to be the leading indicator of risk assets, or actually is it decoupling? Like, how do you look at the relationship between like a Bitcoin and some of these growth stocks and other things? Should they move in tandem? Maybe it doesn't matter. Like, what do you think?
It's a good question because like I do think factually they move in tandem. I think they should decouple, but they sort of don't, at least not on these days and weeks when the swings are broad. I think if we will look back in like 5 years, I think there will have been a certain decoupling. But at the moment, I think they're still very much correlated.
Yeah.
Because it's the same people, like in a positive way, like who is excited about Bitcoin? It's sort of rather the younger people. More and more institutions are moving in, but it's sort of the Miami crowd, who is excited about disruption and whatever. Again, the Miami crowd. Like it's sort of, there is, I think, not because the assets are somehow, or the asset classes are related. It's more like that the people who get it there is a big overlap between the believers in crypto and especially in Bitcoin and the believers in disruptive technology.